Hello, YouTube. Today I'm going to do another portfolio update for the tail end of June. We did get one more dividend coming in, so this should be the last video I make for June, and I'm just going to go over that. So we have all the June dividends and then show the total, how this strategy is working. This is not financial advice, and let's get into it. So I have been showing this little summary of the dividends. We have the monthly totals. So June is 65.13, and then the grand total for the year so far. And then um, going across, these are all the dividend payments. I'm going to rework this and kind of flip it 90 degrees because I realize this is not going to work to see them very well. But the news is this dividend of $9.20 came in and was not included in the last video, although I said I think one more is coming. So which is crazy. That's the biggest dividend for the whole month and is almost $10. So that's pretty cool. Um, this is a screenshot out of Robinhood just to show you guys uh, where all the dividends are coming from, right? This shows, because I'm not just trying to do this quick and dirty estimate, but yeah, it will show you where the funds, what funds are paying what, right? So this $9.20 dividend, let's see here, did come from that um, YMAX. I don't know why it's on this screen, it's lower or whatever, but yeah, this yield max, this is YMAX, which is very high percent, considered like a higher risk. But that's where the $9.20 came, and here's all the rest for June. Um, the 734, oops, 31 cents, all the way down to the beginning of the month from Jeppy 308. And so all these numbers, this is where they're coming from. This is the MicroStrategy Yield Max MSTY. And I had this on reinvested for a while, but I turned that one off of reinvesting. And anyways, yeah, this 920 from the this must be a special dividend because look, I got two payments, one on June 23rd and one on June 27th from the same fund. So maybe this is something they call a special dividend, which maybe I shouldn't count on. But if we do a little bit of math, so there's the 920. What is interesting to me is the total in the fund is about 6,500 right now. And what's interesting is the 6,500 compared to the 65 monthly, and you might be able to quickly tell. Let's see, how would we do this? Uh, if we do the total 6,500 and then we divide it by the monthly total 6513, that I think that should be, no, that's not working, divided by 12. Okay, we want 6513 divided by 6,500 should be okay. And then, so this is the percentage yield for the month. Remember these yields, like on this one, JEPQ, which I really like, it'll show you the yield here on Yahoo Finance is 11.28%. That's per year. So if you want to figure out your monthly yield, you need to take this 11.28 minus the expense ratio. So we'll just call it 11. You have to take this 11% and divide it by 12. So in this case, your monthly yield is 0.9%. But month after month after month, you're getting up to that 11% for the year. And what I have shown is we want to see like our total yearly average. But what is interesting to me is this 65, if we take what we got this month, 6513, divided by the total in the account, we're going to get this decimal place. We'll times it by 100 to get the percent. And yeah, this is showing that this is 1% yield per month, which might not sound like a lot, but that is per month. So that's the whole account. We got 1% yield on the whole account. So what we want to do is we want to multiply this by the year. So times 12. And what this is showing is that the whole account, with what's going on right now, is getting 12% per year. Which is pretty good. Pretty happy with that. Pretty happy with the diversification right now. Yes, we have some things that are considered higher risk right now, but basically a low risk type of fund, I think I can more likely kind of set it and forget it. This is like clause, which we also got, oh, because these are two different accounts. That's sort of, we have like clause and JEPI and JEPQ are lower risk, and they're more like set it and forget it. Although, if you are actively managing your account, you do want to check these things. Whereas these yield max, YMAX and MSTY, they are higher risk. We showed they're higher risk. They have a higher yield. Those ones, more likely, I need to be kind of watching what they're doing and be prepared to exit if things are going south. And this is JEPQ over time. One thing that can be noted is the trend on this. This type of fund, 1, 2. It's been around about 3 years, and it's kind of following the Nasdaq. However, there's another one that I saw. Yeah, here this QYLD is different strategy, but similar, almost the same yield, almost the exact same yield as that other one. But if I go to all on this, I can see. So this fund has been around a lot longer, right? The other one has only been around for 3 years. This has been around a lot longer, and in all times for 10 years, the value of the fund has gone down 33%. Now, in 10 years, if it was yielding 11% over that time, um, you're still ahead, um, right? So this is interesting. It wouldn't be like a true diversification from the other one because it's still NASDAQ, but it is a different strategy. Question with this is okay, so maybe it's at a low point, which might be a smarter time to buy into this fund. If it's averaging in this 20 to 22 price area and it's at this low point, maybe this is a smart time to buy in. Or is this showing just overall weakness on the fund and it's just can continue to lose value over time? Um, I don't know, but I do like this type of chart better that is more slowly trending upwards, or the other ones I'm in that are at least staying um, like level with the overall market. So that's the update, and this chart I will flip it around before the next video so we can fit everything on here. Um, 65 a month, if that were to continue, 65 times 6 months, that'd be 390 for the rest of the year. Or if we just kept this and didn't touch it anymore, 65 times 12, um, 780 a year, which is all right. And then we can also do some stuff if we're able to double this and get it to like 14K or something. So we'll take the 65 a month and let's double it to 130 a month and then times 12. So then we're getting into the 1500 a year type of situation. And yeah, use that dividend calculator and see what, if the dividends are reinvested, where your strategy could end up in 10 years, 20 years time. So good month for what this account is doing right now and the direction that it's going. Obviously, this is the beginning of this fund, so was able to basically grow it very quickly. We won't see this type of like really fast growth um, probably for a while, but it's a good direction. And again, this is not the only way to invest. This is not the only way to have like a long term strategy. And this is just part of a diversification. This is not the only thing that I do. But I wanted to highlight one way to diversify and uh, show you that this is possible and uh, it can get you this passive income, $65 of passive income this month. So let's keep going. Thanks for watching. Are there any funds that you would include? I have Jeppy. Um, I will continue to look at other ones. We can pull up SCHD. Again, it's for me. This is about being diversified. This is Clause. I really like this one. Um, and we'll probably continue to hold this. Um, there's some similar. So this is 8.42% with the expense ratio there. There's some similar kinds of funds. Let's see what this is. What would you add? I actually recently heard some really good things about this one too. This is FDVV. Again, I don't own this. This is more like SCHD. It's a low yield comparatively, 3% per year. But in this fund, yeah, has not been around as long as SCHD, but you can see a good upward trend. So this might be a good thing to balance everything in the overall portfolio. Although this might be better in a different type of fund. With this only 3% yield, I want to average 8 to 10%. Um, this is SCHD, very popular. Better is closer to 4% yield. Um, and this should also show, yeah, it's been around a lot longer, can grow with the market. Some other of these income ones. Oh, wow, look at this. So this is why you need to watch out for this stuff. The yield on this is 9.66%. But if you look over here on the right, the expense ratio is 13%. So this fund is costing you more in expense. This is like their fee. The expense ratio, the fee, is more than the yield. So something is going on here. This is bad. Um, I would not touch this. At PBDC, something bad is happening with this. Not sure why. Same thing with this one. Oh, this does not have a yield? Oh, this is interesting. I don't know why. I'll have to look at this one. This is kind of interesting. I don't see an expense ratio on here, but this does have, so this must be structured differently. You should try to understand what you're going into. I kind of like, I wish I knew why this dropped from 19 down to 13. But if it stays in this 13 to 15 range with an 11% yield, that could be good. Might be the same one. This one's similar to Claws. Little lower yield, but I like these CLOs. And I need to continue to find ways to diversify. If you have any ideas, other like 10% yield funds that are in different sectors. Like I think there's like an energy sector income payer. Um, Obviously, I will show if I add anything like that. And otherwise, yeah, thanks for watching, and let me know if you're trying anything like this strategy.